In trading, your biggest edge is not predicting the market, it's in controlling yourself. Hey traders, welcome back to Your Nifty Guy. In today's video, I'll share my Nifty setup for tomorrow, walk you through the key zones I'm watching, and explain how I plan to enter the trades with them with discipline. If you find this series of videos helpful, make sure to like the video, share it with your fellow traders or trading communities that you might be a part of. Subscribe to the channel if you haven't already, and drop your thoughts in the comments below. I read each one of them. Now let's get started. And as usual, the video will be in two parts. First, we'll be discussing what we had planned for today versus what happened in the markets and how did we play that, and then we'll plan and strategize for tomorrow. So let's get straight to the charts. Uh, Nifty opened with a slight gap up. It was almost a flat or flattish opening. I'll consider this a flattish opening. Now, when Nifty had opened with a slight gap up and was trading near the yesterday's low, which is the Friday's low, I was anticipating that today will be the day when the morning trade that I so expect you tell you guys about the rare trade setup which is there might be in the pipeline. So for that particular trade setup again, because we are here, so Friday was a trending day with markets closing near the day's low. It was also closing near a important support level low, and that was the reason why, in case if the first candle would have been or not exactly the first candle as well, but anywhere at the start of the day, in case there would have been a negative candle and then the high of that candle would have been taken out, there was a good pause trade on the positive side that could have been taken. Now, but that did not happen. And if that would have triggered, in case if market would have triggered, breached Friday's low, and then this up move would have come, it would have come with even much more great momentum. And that was the reason, again, there was no particular trade around here. Now, this was a double bottom formation, again, from coming back from our support levels. But then, because we were already so close to the resistance level, plus the stop loss was a pretty big stop loss, I did not enter into this particular trade. Now, the first trade for me was around here. So this was the first trade which I took on the short side of the market. This was nothing but a clear double top and a W on the charts. But then I got out in this particular candle, which followed all the rules of for me to close the trade. I got out cost to cost on this. I will be glad if the little amount which was shown on the screen would be covering my brokerage and other charges. But then this was the first trade wherein I got out cost to cost. Again, it was a simple trade. Again, we were looking to short the markets around these levels. Now, it is not exactly necessary that the markets will always take resistance only from these levels. Now, try to understand this is the 0.5 to 0.618 zone. Below this also are important retracement levels. Now, I pay high importance to this particular level. That is why only this is there on the chart. But then try to understand markets can take resistance from level below from that as well. And since overall tone was bearish, I decided to take this particular trade on the short side. Again, another reason, I'll quickly point it out. Out around here on a 5 minutes time frame, there was also a bearish divergence. So the reason what I'm explaining is these are the key factors which I look at while I am planning and executing the trade while in the live market. So we are below a resistance zone, not necessarily that we'll have to tap it. This is not an order block that we need to touch the order block only then is the trade valid. But then again, this is a setup which is based on fib levels. And of course, the markets can take resistance from the below levels as well. And again, that was the reason with the clear RSI divergence, I entered the trade around here. Again, the trade did go into some profits, but then again, immediately reversed. And I was quick to cut my position around here because this candle fulfilled all the conditions. We were in a short side trade. This candle, the high was higher than previous high, the low was higher than previous low, as well as the closing was above the previous candle's high. So that was the reason I got out around here, cost to cost, and I am so glad that I did get out. Now, post this particular candle, again, around here, I was again very keenly observing the price action. And say, for example, this was the high which was made, which had touched our resistance zone that we had drawn. And after this particular move, if this low would have been taken out, I would have again very gladly taken a short position. Right. Even though that has not happened, right? But the point of me discussing the same with you guys is how I am planning my trades while in the live market, what was going on in my mind. So that is the reason why, again, around from my resistance level, in case if this low would have been breached, I would have very gladly entered into another short position. But the markets did look strong. The markets went up, 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 gave us a closing above the resistance zone, gave us a follow through candle. The follow through did come in. And as we had planned a long entry above this high with a pullback, this is a pullback. Now, this many people would be confused about why I am calling these three dojis as a pullback. Now, try to understand what we need around here is some sort of a halt. Now, you can also consider this as a breakout and retest of this particular level. It all depends on you. For me, anybody who is around here who is into Nifty trading, please go and check out the option premium charts of the 24,500 call. I traded in that particular call option. Go and check out at this particular time level the kind of sideways price action the option premiums had shown. And after sideways price action is generally what is associated with a momentum. Now, this is the time wherein the market had given three clear dojis on a 5 minutes time frame. This is when I had decided, okay, if the market is breaching this, I will consider this as a valid pullback, wherein the market is sideways with clear confusion in the market. Right? Dojis are symbolic of confusion in the market. And in case if it reaches up, I will be looking at a long entry. In case if it reaches down, I'll wait for prices to be breaching this particular red candle low before taking any short entry. And prices did breach the high of this red candle, and I entered around here. Unfortunately, or fortunately, again, I exited in this particular candle again for the simple three rules of trading that I follow. The Because we're in a long trade now, the rules are reversed as what I had discussed on the short side trade. The candle gave us a closing below the previous candle's low. The high was lower than the previous high, and the low was also lower than previous low. And that is the reason I got out of this particular trade around here. Again, very close to cost, not a very big or major profit for me. But then nonetheless, these are the trades again what I have also been speaking to some of the followers on my channel who have messaged me, and I have been speaking to them. And I always say one thing, do not chase profits, just chase the systems, and profits will eventually follow. So today I might have taken two trades, and both of them were almost cost to cost. After brokerages, I might even be ending up in negative today. But then that does not mean that we'll not be taking those trades, because what will be the outcome of a trade is 100% unsure. Nobody can say with 100% guarantee that this is what is exactly is going to be. But in case if something suits or is happening in the markets as per your plan, as per your setup, it is your duty to take that particular trade, obviously with strict stop loss and strict risk management. And that is what I did around here. And around here, both the trades were backed by logic. They were not random trades. I did not trade randomly that okay, this is the place I'll buy a put, this is the place where I buy a call. No, all trades were backed by reasonings. And even after that, if I had to get out cost of cost, so be it. Right? The market is not going anywhere. I am not going anywhere. My system is not going anywhere. I'll come back again tomorrow, trade on the same set of rules, same set of planning, and yes, I will be profitable. That is the kind of confidence that I have on my system. And that is what I also tell everybody else to try to inculcate in their trading. Right now, because this fib level has been breached, we'll be deleting this from the chart. We'll also be deleting this low that we had marked yesterday. And for tomorrow, first we'll start with the daily candle. Now, today's daily candle is a very interesting candle. So, I always tell you guys about three rules of prices being reversing. Now, number one thing to observe around here is we are, for last 2 days, we are almost inside the 7th of August candle. Like we were here for 1, 2, 3 days, almost 3 days, we were inside the 1st of August candle. Now, for 2 days, we are inside the 7th August candle. So, we are still in a sideways market. Like I had told you guys, market can go sideways. Uh, Around here. So number one point to be noted is that we are still inside the 2 days range, and that makes this high and this low very, very important for us. Point number two, what I always say about signs of reversal in case of using the simplest of rules is the candlestick patterns and the candlestick important price points. Today's candle, the high is higher than previous high, the low was not breached. Sorry, the low is higher than previous low. because yesterday's low was not breached. The high is higher than previous high, and we wanted the closing to be higher than the previous high. Now it was breached by it missed the closing by just a fraction of a point. So, uh, 8th August high was 24,585.5, and today's closing is 24,585.05. So it's like 0.45 point, not even half a point. But then again, we are very close. I'll take this as a kind of a reversal on the bullish side, and the kind of move that came in today, the markets showed some strength, some buying again. So our trade will be planned according to that. Number one and most simplest trade, today's high. We open flat, we go up above, pull back, we can take a long entry. Also, we'll be extending this trend line. Be careful around these trend lines in case if we are, of course, we are reaching above this trend line with a pullback, a good long entry. For no confusion, I'll be drawing it. I'm drawing it on today's price action area, but this is for tomorrow. So do not get confused. Now, because today was again a good rally on the upside, I will still be telling you guys to look out for the rare trade that I always speak of. For tomorrow's sake, the color needs to be green, signifying a bullish candle giving us a closing above today's high, and then the low being taken out. In case if it happens, we will plan a trade on the short side around here at the opening, right? The trade, if it has to happen, has to happen around the opening. And if it happens very later on, again, we'll not be paying close attention because there will be a lot of price action which would have developed, and we need to pay attention to that. So this is a trade which is a rare trade, but then again offers a very good risk to reward, nothing else, right? So just keep an eye out in case if we get a good bullish closing above this, and then the low of this bullish candle gets taken out, we get a good scalping trade on the downside. Now we will again be using our dear friend Fib, and I will be marking this particular level. Delete the Fib. I will be short below this level. Around here, if we get a positive price action, is where I will look at creating a buy opportunity again. Again, that is all dependent on the price action and the opening and how we are developing the price action. But nonetheless, these are the things that you should keep in mind. So I hope the simple plan of action for tomorrow is very, very clear. And we'll not be predicting anything, but we are prepared for all the major scenarios. What can happen in case of a gap down? We can look for a support around these levels and then a gap filling trade. In case of a gap up, we can look for a buying above this. In case of a flattish opening, in case if we get this rare setup, yes, we'll be ready to trade that as well. In case of a gap down and price not taking support from here, we'll wait for prices to give us a closing below this. With the pullback, we'll be able to short the markets again with much more confidence. So we'll keep our trading as simple as we can and pay very close attention to price action and the cues everywhere, because trading is actually simple, but it requires a lot of effort from your end, a lot of planning from your end, and a lot of discipline from your end. Do not get carried away by FOMO trades, or do not get carried away by greed. Do not wait in losing trades in anticipation of hope. Please do not do that. Again, that is something, if you are taking trading as a serious business for yourself, as a consistent stream of income for you, these are the rules which you need to follow. Again, all this planning, all the strategies, all the indicators, everything else is just 20% of the trading. The rest 80% is dependent on your psychology, on how you control your emotions while in the live market. And one important or one very good pointer to that is not to focus a lot on the profit or the figure in the profit. It is directly equivalent to your capital, to your position sizing, uh, to the multiplier, which I call it, right? So I always calculate my profit and loss in the number of points that I capture in the option premium. Apart from that, whatever is the total net profit and loss will be depending on the quantities that I trade in, right? Again, the quantities that I trade in will depend a lot on the price action, will depend a lot on the size of the SL, the logical SL which is there, based on which I will either increase or decrease my position sizing. Again, what is the major sentiment in the market? If it is positive and I'm taking a trade on the negative side, I will be doing it with lower quantities. If the sentiments are negative and I'm taking a trade on the positive or on the long side, I will be taking those trades with a lower quantity. So a lot of factors will be dependent on that. But then again, just focus on the number of points that you are capturing and not on the amount that is in the profit and loss, and maintain a good and healthy risk to reward ratio. And even with a low success rate, you will still be able to make good money out of the stock markets. But then number one thing is discipline. So I hope you guys will work on that. I have a video on trading psychology, what are the traps and how you can avoid them, how you can prepare yourself to avoid them. Please go and watch that if you haven't already. It's in the channel. You'll find it under the tabs which has the trading or the market or stock market learning playlist which is there. So yeah, that's it from my side for today, guys. Thanks for tuning in. This is your Nifty Guy signing off for today, and I will see you guys again tomorrow post the market. Cheers. Thanks for tuning in.